Hello guys, glad to have you on board again today. We're supposed to do intraday and we'll do obviously, but I need to talk to you about a few stuffs that's been done in the swing portfolio. I also need to tell you that I'll be putting in the choices of topic in Discord for tomorrow's educational content, obviously. And I'll try it as hard as I can to figure out an MCQ test eventually by the end of this week, because if I can't do it during that week, it's going to be real tough to make it next week, and then we'll be halfway through September, so it's going to be even more complicated. So I cannot really guarantee I'll be able to make an MCQ test this month. I'll try it as hard as I can to handle this ASAP. Anyway. So swing portfolio first, and a quick look at cryptocurrencies. So nothing new in the crypto sector. We're still digesting this intermediate wave. I still expect a second wave to the upside, breaking this trend line just to catch up on some bullishness and see the bulls like exhausted, excited because of breaking a trend line and stuff like that. So obviously don't be overexcited if the market just breaks up this trend line. It absolutely means nothing. What we need to break is the 12K area, and I sincerely doubt we'll ever be making it in the near future. So we're purely ranging into mature structures. Actually, I never thought we would have this triangle back in those days, but still, like I said, I don't want to brag myself. The indicators are not magical or whatever, but sometimes they get to be better than I am. So no matter how much experienced I can be, and obviously there are way more experienced traders than I am, so they still tend to believe to surprise me at some point. I never saw this potential fucking triangle structure, but actually the indicators somehow told me that we had a mature range at that stage, and the only structure we could have had is definitely that triangle. So now it's setting itself in motion, but yes, actually they figured it out earlier than I even did. So I was obviously figuring out a bearish market at the stage back in those days. They clearly told me, all right, the range is probably the most probable structure to set itself in here. So I would say follow the goddamn momentum, because that's what people do in those markets nowadays, like robotized market. They don't have a look at price action, they have a look at the momentum of those price actions. So we don't treat prices, we care about how they behave with an RSI indicator. So you know how stupid I think that is, but still, that's the new motive. So that's the reason why I've been using my RSI recently. Anyway, it's no big deal. What actually matters in this indicator is not really the RSI line. It's more likely those stuff that will help your risk managing, like a professional would do. So anyway, this triangle still remains the most favorable probable structure in the nearby area, so I very well expect that we're going to try fucking up this trend line, not to go real far, but just like, all right, going in there. We generally typically target 61% retracement in those structures, so be aware that let's go 4 hours, is going to be more than enough. We generally want to target at least 61% in this area in here, but I'm not certain that the Fibonacci's have been set. Yeah, right. So this is what we're targeting, all right? This is the 61% fib in here. So target this area, all right? If you want to be bullish, don't forget to profit take in there, all right? Really don't forget. Sorry. Don't forget to profit take in this area. That's a mandatory secure for this trade. If you try to catch the bottom in here after these 2 sets of waves of consolidation, if the market reactivates and if you want to buy it, don't forget the risk managing. It's absolutely necessary. Just look at the freaking context. We're flat as hell and volatility keeps on contracting. So like I said, I don't expect much gain coming from Bitcoin, but I very well expect that if an upward move gets in here, and if that's like, for example, a 10 to 12 to 15% move into Bitcoin, I expect pretty much more than that in all coins. This is the reason why I was buying. I say, all right, if we ever have to have a little upswing in the forthcoming days, I think Bitcoin will hardly get to profit from this, where others could significantly break resistances. That doesn't mean they're going to surge and triple their values or stuff like that. Just they will eventually provide a risk fucking management in which I don't know what the fuck is going to happen next, but I'll have secured trade, which means if I'm wrong, I lose nothing. If I get to be proven right, I'll take nice gains. So that's the kind of trade I like more than anything else. Not really trying to see that if the altcoins are going to reverse and quadruple or making 10 times the value, but more likely just there's something to deal with in here, risk limits, and the future will tell us what the fuck is going to happen. So that's still the current motive for me in the crypto sector, as long as the BTC dominance is not retracing back to the previous support. So as long as we're not yet 70 in the BTC dominance, I see very likely altcoins performing better than the Bitcoin. And I'm curious to see how the market will react in this area. So if the BTC dominance finds some support in the 70 area, like for example, Bitcoin not reversing and accelerating towards the 12K, which is possible, obviously, then in that perspective, eventually Bitcoin can be a buy-in entry. But right now, I don't really think that's the case. I think the 70 area is going to be a cluster, but just have a look at this trend channel. It's almost the size of the context of the resistance contact width. So in that perspective, man, no way. Consider this as being the equivalent of a momentum squeezing structure. Remember that the momentum can squeeze when momentum amplitudes are so narrow that we cannot actually forecast any fucking cycle within. So that's the exact same thing that happens with the price in here when the trend channel gets so narrowed that it actually gets to mix up with the context resistant or support. And in that perspective, you have the equivalent of a squeezing structure. So consider now that the price is squeezing, which means some volatility will come out of this. In those structures, just like a squeezing momentum, you don't know what the fuck is going to happen, and it can accelerate to the upside. Very less likely in the current context, but it means that you're rarely going to have support workouts in this area. It generally means the market may fuck up the first support almost instantly and reverse from bullish to bearish. That's what it says. All right, so it's still going to set ranges, so there are going to be some pullbacks afterwards, I think. But anyway, it means the reverse can be brutal, so don't be too aggressive in those markets. Don't put tight stop losses if you're buying. That's what I want to say. Anyway, aside from cryptos, this is what I've done. So I've been executed bearish reinforcement on the Nikkei overnight. This is the prices I wanted. I got executed. Today I'm closely looking at the German index. I think I'm going to take my bearish entry today. I'll let you know in Discord if I have the time. VIX is performing pretty great. I'm hoping that the VVEX instead is going to break a previous day's highs as well. So I'm closely watching this one, seeing if VVEX is reactivating. So this is the anticipated volatility on the volatility contracts themselves. So what I would like to see in here is the market accumulating in this area, going bullish and fucking up this resistant context. And this will obviously bring the VIX to a sharp, brutal reversal. Don't forget that we're having expiration next week, quarterly expiration, so 4 witches in this thing, so very important expiration. Most of the contracts are closing bearish. Obviously not the US, but still. So we'll see how this works out. Closely watching the junk bonds as well, but not right now. Still monitoring the gold, trying to figure out if we're going to find some support in this area, or if we actually get to retrace up to down to the previous Fibonacci retracement, because if we do, basically that would mean that this movement is pretty much over and that we're going to start to consolidate it. If we just find some support in here, work this area and keep grinding upward, which seems to be the most probable scenario to me, not even getting to 23% Fibonacci, I think we're just going to like pay their due. Like, I mean, we've been doing some stupid trading in the US for months, so why not doing stupid tradings in the gold? I think that's exactly what the smart money is doing. They're just gonna fuck up risk management on every other risk-off assets. Like the yen, I think, is gonna go out of control, just like the VIX will go out of control, the gold go out of control, because simply we're gonna have to trade those just like we traded the stock market in a stupid manner, one direction, no consolidation, no pullbacks, no oscillation, no risk management, just straight lines to the upside. So I still want to be bullish on the gold no matter what. I partial profit taken in this area just in case, but I strongly believe that if that's the kind of asset that you say, all right, I risk managing in here, I profit take because this is the area I wanted to profit take. Like I said, to me, the major movement in here is this fucking breakout, and I think that's a weekly possible breakout as well. So the daily is breaking, and we're pretty far from terminating this trend. I don't really think this trend is over, definitely not. And the worst case scenario would be this to be a weekly trend instead. And if that's the case, then, oh man, we're gonna have a lot more gains along the way. I see absolutely no signals rather than possibly a divergence. But does that really look like a market slowing down in here? Absolutely not. To me, it really looks like a market that just keeps on piling gains more than anything else. So I definitely don't want to exit that kind of markets. The WTI, we'll talk about that later on. The dollar is still the big mess trying to figure out. So obviously we're going to setting ourselves into ranges. There's figure out top to bottom to be the previous traded area. Let's make it a reverse. No way, so it's the classic. All right, so we're right into the dumb zone, and that's absolutely no surprise. We're gonna just die in here until we get probably a typical answer from the ECB. All right, so anyway, if you ever get to see the market trying to get to those red or blue areas, you know there's a trade to make. All right, so either bullish or bearish, who cares? But obviously you know my personal bias, so getting in here I'd definitely not buy. But if you want to go do it safe. I personally would prefer getting into this area for a speculative bearish and for entry or reinforcement. I think I do have DXY anyway. So right now nothing is interesting. Like I said, we're boundary trading into the dumb zone, so let the DOMs trade the uninteresting prices. If you have a bias, either bullish or bearish, try to support this area if you're bullish, try to sell this area if you're bearish, if it gets offered. And obviously what you try to do is accumulating the shit in here, get the bearish breakdown for the bears, get the bullish breakup for the bulls. It's simple as that. All right, so first of all, we try to resist in those areas depending on your fucking bias, and obviously at the end and at the release, not necessarily coming with the ECB. It can be coming from both. Like getting in here, we can have a move from the ECB to the upside, sold, and then the Fed pushes down. So we really don't know. It's going to be how both central bankers will be playing, and if we have a divergence between the two, how much divergence this is, how much basis points difference, how much forecast, how much that's what matters in here. Not necessarily what's going to be done, but what's going to be said out of what's coming next. That's really what matters, because the markets cares about anticipation. Are we on the verge for a rate cut system in which we're going to have multiple rate cuts with the dollar? And in that perspective, definitely the dollar is way weaker than the euro, which is already down the ground. We've got nothing else to do in the euro area. Like cutting 10 basis points is definitely the best we can do, and we can rarely go even further below without destroying banking system. So the problem is, yes, negative yields, we know it has a dangerous impact on banks, even though central banks are thinking about a way to make it less impactful. But still, the problem is it is impactful no matter what, and you cannot like try to push up that button, rising up the risk without seeing some side effects. Everything is linked, so you cannot inject money and like bring up accommodation without alternative negative effects. It always comes with a con. Everything that is positive is bringing something negative. Whether you like it or not, that's how the fucking world works. And the problem is, central bankers think they can like monetary accommodate forever without side effects. So no way, that's not how it works. And we all know it's not going to end well at some point, but still, so far, it's just working not that bad. Anyway, we're not going to go into this dangerous topic. So that's it for today. Finally, I'm going to talk about Apple. So we got a keynote later today. Obviously, not a very interesting one. No one is expecting to get nothing but just better versions of the previous stuff, more than anything else. So it's just putting faster chips, bigger screens, bigger definitions, whatever the shit that's going to be, bigger cameras, or that's it. That's all we're going to get. So expecting this to be really a non-interesting event anyway. I've been tweeting this for the French guys yesterday evening, but I saw an article in which basically the guys have been making a survey in which they say out of the people we've been asking, 2/3 of them were basically saying we're less interested in the keynotes that we were in the past. So they don't nearly give a shit about that anymore. Simply is the pure reflection of what I told you for months, is that people are just losing interest in Apple simply because Apple is not innovative anymore. And that's just the absolute normal reaction to this. They're not innovative, they're still not putting prices to the downside, which means they're playing on hype, they're playing on margin, because they basically sell you something like 2 times what it's worth, though they make crazy shit margin out of it. That's great, that was Apple's business model. It works just fine when they were the leaders, the innovators, and stuff like that. They're no longer. The Chinese guys are now innovating, they're just basically picking the stuff from Apple and doing it better and cheaper. So that's the normal stuff. When you get to make crazy fucking margins, you bring competition. I already explained you that system. So competition leads to less margins. Less margins means means to less customers and means lesser margins. So you're gonna have to dampen the margins with with a narrowing customer base. So you're basically losing clients and losing margins. How the hell do you think this can be more profitable in the future? So, like I said, that doesn't mean Apple will stop selling phones or that Apple will die. It doesn't nearly mean that. It just says Apple will no longer be the top one leader on top of everything else. They're just going to be among a freakingly large mass of phone suppliers, and definitely that means their revenues from phones will shrink, and not just a bit. They'll shrink and they'll keep on shrinking through time. So either they're going to have to migrate somewhere else, but the problem is, do you really think like Apple TV is the best TV in the world, that they've been inventing something like they invented the iPhone back in the days? I don't feel it that way. So I don't see a leading product in Apple's stuff right now. So maybe something is on the verge to show up, but I don't really see what the hell this could be. So either it's a big surprise that's going to come over today and they'll be the game changer, or it's just another bullshit keynote in which they'll say it's a revolution to put a bigger chip into a smaller phone or whatever. But that's what every fucking producer of smartphone is doing. So they're not innovative anymore, and they're freakingly pricey. Like for $1,000, just look at what the fucking Chinese phone you can get for that price. Like I told you, like you take a Xiaomi Mi Mix or anything like that, these phones just got less than $200, and they're freakingly solid. They're really, really great products, and they just worth like 4 times less than an iPhone. So you can break 4 fucking Chinese phones without even breaking your iPhone, and add the services out of it, like the Apple Care or whatever, and you pay $1,500. So you do whatever you want, but like I said, I don't really think that motive is going to work for time. So it was just a matter of time before Apple's hype were to reverse. It took years, but I think we're finally there, and I think it's about time the price starts to reflect that hype. The first sign was this, like so many people tend to forget about this, like it was nothing, and all right, no big deal. We managed to save the dip. No, you didn't. You tried to, and if you fail in here, the shit is really going to come, and people will figure this out as being negative tops, and they will figure out the next one to be a negative bottom. The problem is when people tend to forecast how much they can lose, they start selling. And that's the problem. When you're selling without buying and without a positive impact, which means we see that the user base is shrinking, we see that there's going to be less revenue, we see how much we can lose, do you really think people are going to keep Apple shares in their portfolios? No, they won't. And who the hell is going to buy that? That's the question. Who's ready to buy Apple at 180? Oh, at 190. Certainly not me. Who's going to be crazy hot buying Apple 165? Probably a few guys, but like I said, the guys who are going to buy in here are most likely guys like me who will sell, that will just risk manage in those areas. So they're going to sell 10 stocks and probably buy 1 or 2 in here. So they're going to still be short selling the value. And like I told you, I don't think the bulls have this value under control. I think the bears are slightly getting control in here. That's not a certainty. Like I said, I need a confirmation in here. I need the market to break as support. And when they do, I think you can hardly say what's going to come. But if it happens, do you really think the bulls are going to support prices? No, the bears will be in control. And they will handle the price management. So the price will rebound whenever the bears will figure out they've made enough gains. That's exactly what I think is coming next. And the question is, look at how it's behaved on the first wave. The second wave, I think, is rarely going to retrace. I think we're just going to have tiny, like 23% retracements before going down, 23% retracement before going down, and stuff like that. That's the way I think we're going to go down with Apple. All right? Not even a damn retracement, just like technical rebounds like that. When we get to support area, the bears partial profit taking, but no more than that. All right, have a look at Microsoft as well. This one is tough. I've been sharing you this one later today because I think really an Apple-like structure. Let me just zoom out that shit and you'll figure out what I mean. So let's go Apple in here. Apple. All right, so remember Apple back in those days, those glory days. Apple was so strong. Why the hell would it reverse? There's no reason to reverse. Now let's have a look at the entire software services pricing. They have been collapsing. Most of them have been losing 20 to 30% over the latest weeks. So the software sector, not necessarily in a good mood right now. It's just like the same old stuff in here, right? Cell phones and suppliers or whatever were signaling some pretty damn red flags, and people were just ignoring it. Like, no matter what, Apple is so strong, they're always going to figure this out. Did they? No, I don't think that's what we'll call figuring this out. So is Microsoft about to figure this out? I don't know. People still tend to believe they will. I tend to believe they'll fail, and if they do, obviously I'll sell them hard, just like I sold Apple back in those days. So I'm closely watching at Microsoft, because if they fail, there's obviously a very nice gain to make, probably a 30 to 40% drop in here as well. And like I said, there is a cluster of information in all those big names. Like, if Apple goes down, it's not going to be pretty, and they're certainly not going to find any investors anytime soon. Tesla, there are so many competitors. Just like, I mean, now Porsches are getting into electric, fully electric, with a bigger range, much more beautiful cars for just like, what, 20,000 more. So it's just like, regarding the current pricings for Tesla's Model S or whatever, just like I told you, big margins. It's the same thing with Apple. Big margins, a niche sector, obviously bringing some competitors in. And competitors, when you make shit tons of margins, can be more profitable than you do. And it's just a matter of time before the hype just cools down. And when it does, I'm sorry to say it, but that's your money who's basically burning at a very fast pace. That doesn't mean you weren't an innovator, you weren't a leader, you weren't whatever it is. It's just that people are overpricing your stock, and that's real dangerous. That just brings opportunities to the downside. So I think Tesla still has some downside. I think Microsoft has huge downside coming along the way. Facebook's, Nvidia's, and stuff like that, you already know about them. I think Boeing as well is in great danger. This one is accumulating in this area, so if we ever get back to support areas, I think we have a mature range accumulation in here, which means breakdowns are along the way, and I hardly see how this value cannot be bearish. There's just a pile of bad news, like just taking this one. They've been trying to, I've seen this one later yesterday, yeah, so that's the one with the 7070X, they just tried to go over some regulations and they just burnt a fucking engine. So it's just like, oh my god, there really is just a pile of bad news coming from this sector, and it's just like, all right, people still want to believe in the growth values, but we're starting to see that they do not attract money anymore. No volumes, and we're just waiting for the next drop, actually. I think that's what the market is actually waiting for. So the thing is that growth values not performing anymore and showing some strong signs of bearishness along the corner, and not the tiny kind of bearishness, the bearishness 30-40% drops. All those names have those risks, Amazon included, obviously. But the thing is that in the meantime, what you see is value stocks showing some early signs of positivity. Like, they cannot break any more supports on General Electrics, and that's the rotation I was waiting for quite some time. The one I told you about for like months. Yes, as usual, I was really way too early on this, because the market is pretty fucking resilient out of end of economic cycle, and I've never traded that, so that's my first end of economic cycle. And I'm just figuring this out, and I'll definitely have taken my lesson the hard way this year. But believe me, the next end of cycle, I know how to deal with that shit. But I never expected the market could be such resilient, that much resilient. So it is, but still, that doesn't change any of my plans. I think that right now the next domino is about to come, like the rotation. You'll see those value stocks breaking resistances, when the growth stock will start breaking resistance, will start breaking supports. And whenever that happens, that's the next domino. Remember, the dominoes for me still standing are the dollar. So I think if we have a rotation favoring value stocks instead of growth stocks with a reverse yield curve, I hardly see how the dollar can be bullish. But still, all right, that's another topic. So it still has the dollar to come. The gold has been played. The reverse yield curve has been played. The market top structure has been played. We do have this expanding wedge structure on the SPX, so that's the potential reversal structure. We don't know if it's going to validate, we just know it's there. I wanted the background topic, like the macro congestions, to be switching to bearish. The next step is I want to see a job market bottoming up, and that's probably what we've seen on the previous NFP. Remember not to have a look at the crazy fucking numbers you get on the economic calendars, but most likely having a look at the U6 unemployment numbers. They have been reaching out 7.2 after 7 last month, so we might build a bottom, and a solid bottom, on the job market. And whenever this one reverses, another of my domino will fall. It's probably the one that was going to cause the dollar to reverse as well, the Fed to act more aggressively, stuff like that, you know the drill. And obviously the rotation from growth stock to value stocks, I think, is on the verge to set itself. At least is at play. It's at play at the current stance. And I'm just monitoring it to see if this domino is about to fall. And obviously, when all the dominoes are falling, then basically just the growth stock fall like shit. They lose 30 to 40%. And obviously, the stock markets, the indices who are loaded up on those assets will have no choice but to fall as well. It's simple as that. It means we've been rising because of those assets. So what the hell do you think is going to happen when those assets will fall like shit? Obviously, indices will fall like shit as well. They're overpricing in with those assets. So that's a simple price mechanic. When you're pushed up by what's the biggest names, when the biggest names fall, you push down, whether you like it or not. That's how it's going to happen. If those big names get to lose 30 to 40%, I don't see any reason for the stock market not to do as well. Anyway, go intraday. Let's figure out what the hell I'm going to be doing. Am I going to go for SPX intraday? Yes. All right, let's do it. I've been doing the German DAX for the Europeans, for the Frenches, so let's do SPX for you guys. So it's going to be a little bit different. So same old story. You get there, you figure out the gaps. So there is no up gaps to fill. All right, everything's been dealt with. All we've got is that ugly, ugly gap with, once again, very, very doubtful reasons, and not to say any more any other words that I'd like to see. All right, so it's, well, let's go for it. It's pure fucking manipulation once again. Like the trade deal. I mean, really, guys, it's been going on for 6 months. So you think there's going to be a trade deal? We had productive discussions. We're nearing a deal. Sorry. So yeah, the trade deal, it's a little bit too much. Anyway, so what we've been done yesterday, what we've done is not that bad because we actually managed to do something strange, but we've managed to close first of all, below the previous day open, which was obviously an up day closing lower, but still, in a closing basis, we finally managed to close lower than the previous day as well. So that isn't necessarily a big deal, but that's 2 days on with a bullish gap closing lower, obviously lower shadow candles as well, so that's not necessarily the worst case scenario, but it just says, all right, we're trading this area. It's really resistance, and what I like is that this gap has been made out of a big lie, because at this stage I never imagined that the market would just buy that kind of shit anymore. The trade deal, like what the fuck are you buying? You're really kidding me? Like you don't sell when Trump is making his tilting scenario with the tweets. It's tweet storm, basically. You just don't even break a fucking support out of this, and just because Trump said a fucking big lie, the market's just buying out of it. So it's just, oh my god, it's always the same stuff. Chinese gets to remain silent, don't say any fucking thing regarding these trade deal discussions, but the US like over communicating, they're great, we're doing great. They've been doing that shit for 6 months, and we had nothing but just an escalating trade war. So at some point, those headlines shouldn't nearly be cared about. The thing is that we still care, and having that kind of gap paid by the market really feels like a joke to me. So the question is, are we gonna hold this gap? I think first of all, no way. And secondly, how are we gonna be trading this area is a really, really interesting thing to me, because I had an interesting question yesterday over email, someone telling me, all right, Phil, you always say that we're gonna have to fill the gap in the caching market structures, but what happens if we were to down gap below the 2940? In the forthcoming days, for example, eventually the Fed or something like that, if we get to down gap, do we have to fill this gap? Yes or no? The answer is no. If we get to down gap this area, then there's no need to fill this area. Simply, this will be called a abandoned baby structure, in which we gap up an area and gap it down right after. And that is one of the strongest reversal areas. So if we're about to make a bearish trend out of the SPX, just like I told you, because of the big names just pulling down the assets and the values of stocks, then obviously if we were to down gap back into this range, do you really think people will close this gap? No, we don't. We're going to say, all right, that was bullshit, the usual White House bullshit. We've got nothing. The trade war is still there, and it's not going to solve. We're not going to get a deal. So what the fuck? If we pull back to this range, we're going to sell almost instantly, and that's an immediate sell. Like, this will be considered as a false bullish breakout. You know what's coming right next to it. Bearish breakdown. So, like I said, heavy amounts of risk surrounding these central banker reunions, and the problem is we don't know what to do with it. Technically speaking, we've got nothing to hope for them. All we're going to get is probably another rate cut, which signals just one thing. The central bank have been probably saying it was once and for all, and it's not going to be. So we're going to have a cycle of rate cuts, which means devaluating the dollar and stuff like that. So we'll see, but I see absolutely nothing good coming out of this area, and I see pretty much bad things coming along the way if we actually realize that the market cannot break resistances anymore. Because that's all we can hope for right now. The market to just break resistance. Even if that's for good or bad reasons, we just want the market to break resistances. Even if that means we cannot hold them, like just in here, we just want the market to do it. To just make new highs, to just fuck the bears and push the problems further away a few months, and no more, no less. It's just what we care about doing right now. We're not thinking about 6 months. We're not thinking about a year from now. We're thinking about, oh, if we can just print a weekly candle under historical highs, we can at least say that the stock market is doing great. Even if it's not, but at least it looks like it's doing great, and it's all about it. It's not what the stock market represents. It's not what the stock market means. It's just how it looks. And that is freakingly dangerous, because when you have a look at other stocks markets, just like I told you, the Nikkei, the European ones, they all look pretty shitty. And it's just like, you can figure out your magical alternate reality in the US, thinking that no matter what, you're not going to be impacted by the economic slowdowns and whatever. You are going to be. It's just the harder you try to fight it, the faster the comeback to reality it will be, and the more breaking bone it will actually be as well. So it's just like, at some point, this fight for irrationality just makes no fucking sense in the US. It's been lasting way too long. So I'm just waiting for the moment this structure will break itself and just collapse on itself. Just because it will be a collapse for the US for a simple reason. Like I told you, we've been like hoping for the best, and not just the best. We've been hoping for crazy, crazy rainbow unicorns and whatever. So if we just figure out the reality to be shaded gray like it actually is, it's not the end of the world, but it's certainly not rainbows and unicorns. So, I mean, going from rainbows and unicorns to a cloudy sky just somehow makes it a little bit brutal. Come back to reality. So that's what I'm trying to figure out. Anyway, I'm way too... I shouldn't have gone this way again. It's just I received so many messages regarding the US. So it's just like I'm trying to answer those messages in this podcast, but I should nearly be doing this. You know about it anyway for way too long. So let's go. So what the point in here is to say, all right, if we don't fill this gap, and if we gap it down, don't think that we're going to have to pull back to fill the gap, all right? It's not necessarily, it's absolutely not necessary in that kind of structures. These structures, the abandoned babies, are very, most likely it's not abandoned baby, goddammit. It's an Iceland reversal. Abandoned baby is just a single candle, gapping up and gap down the day right after. It's definitely not what happened. So it's most likely the Iceland reversal in here. Multiple days, generally 3 to 7 days, and then we gap down on the opposite direction. Simply triggers the market has been overextending in an area that doesn't belong, in which it didn't belong. So we've got this gap, and like I said, I don't expect the cashing market to price it in. I expect the cashing market to stay in this range, and then eventually gapping down for the worst case scenario, like ECB or whatever, and we gap down, and that's exactly the worst case scenario. That's what Wall Street wouldn't like. Like, if you buy in here some stocks, and if the central bank meeting that is going to be out of cashing prices timings, all right, so you're going to open the stock market after the ECB, and if it's a downward move, you can be damn sure that we're going to open these areas. So if Wall Street get to open there, the Iceland reversal very likely going to come. And will we have to close this gap? No way. It will remain open forever, all right? Until we get to fill it, probably years from now, afterwards. Anyway, so no problems with the gapping structures as long as we are trading on top of this, and as long as we don't go below this area, there is still bullish bias in this market, even if that's for the worst possible reason, rising out of big old lies. So we go in here, daily charts. We've been breaking the previous day's lows with the futures market, so that's a pretty good news. Anyway, recent activity is we've got a range signal in here, signaled as well on the momentum. So not that best case scenario. We have lower lows on the momentum, and we might be on the verge to build lower highs as well, which means price and momentum going accordingly. Not a good sign as well. So like I said, lots of shadows. People somehow don't want to see them, but still they are, here they are. So 1 hour contextualizing right now. We need to figure out what the hell that is. It's pure and simple. Just fucking put the price off table. If you can't contextualize that kind of market, oh my God. So too much fucking range signals. Way too much. Way too much. This range has been bearish orientated. Like I said, we bullishly orientated this one right now, but oh man, for so bad reasons. So either you say, all right, I follow prices, price is king, whatever. I said something that sometimes the price is just wrong. And like I said, these signals are not guaranteed. Like in here, it said we would be bearish breaking down this area. We didn't. So Now it says we're going to bullish extract out of here, so I would say it's a draw, all right? So it's how we go, all right? One time's up, one time's down, let's go flat. So we're still in a range. You can still see some ranging structures, whatever. So I don't know why the hell we do this, actually. I don't know why the hell we gone up in here. I can't understand that price movement. All I can tell is that anytime we get to retrace the support context, I don't think it's going to work out. I think like we fucked up the bullish context. I think we're going to fuck down the bearish context as well, just to reintegrate the previous range. So just like I said, I'm waiting for this moment. We'll reintegrate the previous range structure, and whenever we'll do, it's going to be straight line to the downside. And what's going to happen there is really a big interest. Either we just pull back, break, or we just don't pull back, or we pull back and we break up afterwards. So many options, but at the current stage, at the current stance, those 1 hour areas is just you sell only in here, you buy only in there. That's all we have to, that's the only available information we have in this context. So 1 hour doesn't give us that much information. We got to go lower time frames and shorter time frames. So we get 15-minute instead. Right? All we can tell after 1 hour is that the range is mature, so we're looking for accumulations. We're trading the resistance boundary, so we'll see if there's a bullish accumulation in here. It's a possibility. Like I said, I don't believe it, but if it happens, I'll have to deal with it. What I'm expecting instead is a false bullish breakout to go for a straight bearish breakdown afterwards. So no accumulations will be needed if we get to break down because we made a false breakup. All right. So in here, as you can see, trending movements, we've got ranging, we've got ranging signals being overcome, all right? So here's a bullish breakout. We can clearly see that the context have been broken significantly. I would say divergence, pullback, final excessive area, or we could still be doing the pullback, all right? And in that perspective, we'll go higher, finding the final excess, all right? So I think for now it's undetermined. So either this is just a long, freakingly long divergent structure, but I would tend to say, all right, no, in here is where we've done the pullback. This is just an ugly final excess. We didn't manage to reach out to the resistant context, but still, we've got the exits. So I would say, yes, that's definitely the area in which indicators forecasted a final burst to the 3005 area. The fact that we haven't been there doesn't necessarily mean that we'll have to. It always says that the resistance we've got in here, the red area in which we said selling only, might be stronger than this trend itself. So we are exhausting the bulls in here. I think we're already reversing this. So the current motive for me will be to set a bearish range. After a bullish trend, we make bearish range consolidation. We target the Fibonacci retracement. So we're already on the 23%. The next one is 38, then 50, 61, 76. All right. And I'm just waiting for this to set itself. We're first range boundary, as in here we rejected one time. We're building the second one. All right. The third range boundary can come out of the resistant context. So either in here we keep on falling next to the 38% fib, or we get to move up to the resistant context and we'll have our third range boundary. All right, 1, 2, 3, and we'll still have probably 1/4 to go for. All right. So that's the topic for today. All right. Here we've got a range. That's a ranging breakout. So remember, these ones in a ranging context will block prices for approximately 40 bars. So what we have in here as technical information in the 15-minute short time frame means we can hardly go lower than 2960 until later today at 7 p.m. in my local time frame. So I think if we go a little bit lower, it's just to underpin the 23% fib, and we can probably find some support in this area. We've got no momentum signal for now, so I suspect we can eventually go a little bit lower. And I would say this area, for those who want to buy, is an intraday buying support area. 2960, hopefully with a bullish momentum signal would be better, all right? Or at least a triangle close to the target could possibly be a buying entry. When you got it, then you try to support prices, all right, for those who have a bullish bias, and you're going to try to buy to push towards the resistant context. Whenever you get to the resistant context, you profit take, secure your trades, and if you think it's going to go higher, you can keep a part of your trades open. But anyway, we're in a range context, so you shouldn't be figuring this out. The range is not mature, so don't try to forecast trends at the current stage, all right? It would just be the second range boundary. We need at least a third one in here, and eventually I think that's the fourth one that you would like to buy. All right, I think the fourth one is very likely going to go 29.40. All right, remember that's the gap we talked about. So if we just fill the gap and find some bullishness, I would say, all right, we consolidated 2 sets of waves, typical range, and we'll be ready to break up. That's the bullish way of doing things, all right, to get to close the gap and rebounds out of it. Worst case scenario, like I said, is we accumulate in here in an ugly range and we gap down with the ECB. Having this would be the worst case scenario, because in this case we'll have done an Iceland reversal out of this big area. All right, so multiple options. Obviously everything surrounded by the ECB is going to be the game changer, whether you like it or not. We've got Apple tonight, but I don't expect any more coming out of those keynotes. So we'll see. That's no certainty. So I'm sorry this show was way longer than I ever expected. I'm sorry, you know I'm the talky kind of guy. So I'm going to leave you guys with this one. Really sorry. So trade the 15-minute boundaries. I think that's the only thing to do today.